Now you have question 1 that is asking you to explain the term taxation, and I'm very sure that at this your level you should be able to explain what taxation is and do justice to it. So I'll not waste much time to explain what taxation is for you, but what I would like you to take notes of whenever you are explaining the term taxation is that you should emphasize that taxation is one of the means by which government raises revenue, or it is the main source of government revenue. And don't also lose the hindsight of Alice telling us one importance of taxation. Alice, it makes your explanation very concrete. But you can see it is just 1 mark, so something small that you say will earn you the marks. Now, the next question is asking you to briefly explain the 2 main classes of tax. Now, I would like you to take note of the II. That is asking you to explain the main classes of tax. We also have a kind of tax. Kinds of tax. And the kind of tax, the GRA is mandated to tax citizens. You have also been taken through. So state 5 types of taxes administered by the Ghana Revenue Authority. This very question here is different from the one you have over here. Explain the 2 main classes of tax. The 2 main classes of tax we have are the direct taxes, and then we have indirect tax. These are the 2 main classes of tax. But the very first one is asking you to talk about the pay as you earn, the corporate tax, the VAT, the gift tax, royalties, on and on and on and on. Those are the types of tax the GRA taxes citizens. Now, you are also asked here to explain 4 canons or the principles of taxation. And you know them already: equity, certainty, efficiency, any dekika income you should know. You have also here, you have to mention 5 advantages of direct taxes. And the duty also lies on you to know the disadvantages of indirect taxes. In fact, the advantages of direct taxes are the disadvantages of indirect taxes. And the advantages of indirect taxes becomes the disadvantages of direct taxes. So they are just opposites in nature. So, ladies and gentlemen, you are also supposed to know the advantages and disadvantages of both direct and indirect taxes. Now, I remembered in our earlier discussion, or in our first meeting, when it comes to taxation, I asked you to go and look for the differences between resident individual, a resident company, and then a permanent establishment. Nobody have looked for it. Nobody have also sent me any solution in connection with what he or she have found out. And it is still pending for you to go and look out for who a resident individual is, what a resident company is, and what a permanent establishment is. Now, the small I can say for you is that a resident individual, when we talk about a resident individual or a resident person, Section 6 under the Tax Act, Act 592, explain a resident person as somebody who have their accessible income both from Ghanaian source as well as from a foreign source remitted to Ghana. So all resident person to be considered as a resident person, if you work in Ghana, you receive your salary here in Ghana, and you have a work to outside, which you receive that salary here in Ghana, you can be classified as a resident person. Now, a resident person must be a citizen of Ghana. That is one. So the fact that you are a citizen of Ghana, you are a resident person. You might not be a citizen of Ghana, but you live in Ghana for a continuous stay of 183 days. You will be considered as a resident person. If you don't also have a permanent resident outside Ghana for the year of assessment, then you are considered a resident person. It is there for you to go and look out for it. But this is the small I can say about it. You have a resident company, a company that is incorporated under the Corporate Act or the company's law is considered a resident company. A company that is directly or indirectly controlled by a resident person is considered a resident company. Then you have a permanent establishment. So you go and look out for these ones and abreast yourself with them. Without much ado, I'll move straight to question 2, which is the major headache for my students. So you have question 2 over here. Mr. Mills Sabute was employed on 1st April 2010 on a salary scale of 6,475 and a cap of 9,500 at Microsoft Ghana. As a financial controller of the company, he is provided with the following as part of his conditions of service: a well-furnished bungalow provided by his employer, in respect of which he pays 100 per month as rent by way of deductions at source. Watchman allowance directly paid to him, risk allowance of 15% on basic salary, and car maintenance allowance of 760 for the year. Leave allowance of 890 per annum, and watchman and garden boy on a salary scale of 130 and 90 per month, respectively. The salary is paid directly to the watchman and garden boy, respectively. There is a medical allowance per year of 1,360. And special retirement package by way of a provident fund, of which he contributes 7% of his base salary, while the company tops it up with 8.5. Meals allowance of 36 per month. Maid servant is there. He is entitled to a bonus of 40% of his basic salary. He has entertainment allowance of 800 per year. There is a life assurance policy, and he is also entitled to gallons of fuel for the month. On and on and on. He has been given a car loan at some point in time at a rate of 15.5. Meanwhile, the market rate is 22.5. He is married with 5 children, 3 of whom are in SHS and the rest are working, and also responsible for the upkeep of his 4 aged relatives. He is a SNIT contributor and currently pursuing a Bachelor of Science degree in accounting at the University of Ghana, of which he incurred 9,800 by way of educational expenses. And it is the hope of the company that the course will help improve his professional skills. And you are required to compute his chargeable income for the year ended 31st December 2013, or for the 2013 year of assessment. Now, this is the question at hand, or this is the question we are starting with. And I presume this is not a difficult question for some of you, because I already solved it with some of you during our face-to-face meeting. But that notwithstanding, still an examination question, and I'll go through with you. So let's move straight to our presentation. Now, first of all, we have to compute the basic salary. We're told that this man was employed in 1st April 2010. So from 1st April 2010 to 31st March 2011 will be 1 year, and this man will take a salary of 6,000. From 1st April 2011 to 31st March 2012, this man is going to take a salary of this 6,000 plus an increment of 475. So in year 2, he will take 6,475. Then in year 3, which is going to start from 1st April 2012 to 31st March 2013, you will take a salary of 6,950. That is the 6,475 plus another 475 will be 6,950. Then in the final year, immediately after 2014, we stopped because we have to solve it for 2013. So 1st April 2013 to 31st March 2014, he is entitled to 7425. But we are supposed to look for the basic salary for 2013. You can see 2013 here and here. Now, when you look at this side, ending 31st March is here. So meaning in the year 3 months out of the 12 months is there. So you do it 3/12 multiplied by the 6950. Will give you 131737.5. Then when you come to the next one, you are going to have 9/12, because if 3 months is at the other end, then starting 1st April, May, June, July, August, September, October, November, December, 9 months is also there for you. So this is going to be your basic salary for this particular person. 7306.25. If you have any question, you go to your screen, the participant side, just close to your name, you see some 3 dots, and you see the raise up hand symbol. Raise up your hand, call you, you ask your question, and then we move on. So from here, we compute our basic salary. Now, in an attempt to compute the basic salary, we bring it over here. Basic salary 7306.25. Mr. Mills is entitled to a watchman allowance of 344. So we put a 344 there. He is entitled to a risk allowance of 15% on basic salary. So I do my 15% on the basic salary, and I get 1095.938. The man is also entitled to a leave allowance of 890 per annum. So I change it over there. Then he also is entitled, they said, watchman and garden boy on a salary of 130 and 90 per month respectively. The salary is paid directly to the watchman and the garden boy. Once the salary is paid to the watchman and the garden boy, you don't bring it over here. You don't record it at all, because they are assumed to be watching over the property of the owner and not over Mr. Mills or Sabute. There is a medical allowance of 1,360. That is note 6. So medical allowance of 1,360 is there. Then he is entitled to Mills allowance. The medical allowance, I could see Mills allowance. Mills allowance is 36 per month. So 36 by 12 will give me 432. He is also given maid servant. So they said note 9. A maid servant of 380 wages per annum. The amount is paid directly to Mills Osabute. So You have maid servants over here. So you put it here. Normally you do it in order so that you will not miss some. So maid servants are on the wages of 380. So you put it there. Then we are bringing it here because it is paid directly to Mr. Mills Sabote. He is entitled to a bonus of 40% on basic salary. And by law, bonus up to 15% of the basic salary is added to the chargeable income and taxed at 5% on the tax liability, or when you are calculating for tax liability. Any bonus that is more than 15%, the excess of it appears over here as an excess bonus. So this person is given a bonus of 40%, and by law, 15% is what is recognized as the standard. And so we will take the 15% as the standard, and the rest of the 25% will be used here as excess bonus. So 25% of the basic salary comes here as excess bonus. So normally the workings is here. So if you don't understand, you pick it over here. And I'm not doing most of the workings here. I'm doing it using the Excel formatting because I presume you are doing ICT. So if you are looking at your solution, or you are looking at this video later on, and I click here and you could see here that it is 25% multiplied by J22. Then I expect you to know where column J is and know where row 22 is. And so therefore you should be able to know cell J22 and identify which of the figures in J22 are we multiplying this one with. So that is just by the way. So from the excess bonus, you have entertainment allowance of 800 per year. And the entertainment allowance, if it is silent, it is assumed it is unaccountable, or you don't account for it. And so therefore, you add it to your chargeable income. If they have added accountable, what it means is that anytime you spend that money, you already account, anytime you spend the money, you account for it. That is, let's say you provide receipts for the spending and so on. So therefore, GRA will not hassle you for that anymore. So I think I've extensively explained this thing in face-to-face, so I'll not waste much time on it over here. So entertainment allowance 800 is here. Then from entertainment allowance, he has been given fuel allowance. That is in note 13. This man has been given a fuel allowance of 35 gallons per month, and each gallon costs 640 pesos. So when I multiply 35 by 640 pesos, I get the amount of cash that he is entitled to for a month. And when I multiply it by 12, I'll get the total amount of cash he is entitled to in a year. That is on the side of fuel allowance. Then this guy has also taken a loan from the company. The loan he has taken at the company said he should come and pay 15.5 as interest. Meanwhile, if this guy goes to the market, he will be paying 22.5. So you can see that clearly speaking, he is making a gain on the loan. And this one is going to be the 22.5 minus the 15.5, which will give you the 7. So the gain he's making is 7%. And so 7% multiplied by the 10,000 loan he has taken, meaning that he is making a gain of 700. Or you can strike 22.5 on the loan amount, which will give you 2,250. Then also strike 15% on the loan, which will also give you 5,550. Then the difference between the 1,550 and that of the 2,250 should give you the same 700 Ghana cedis. So basically, these are the allowances or the cash benefits. So if I should sum up all these, at the end of the day, my total allowances is going to be equal to 10,516.5. And so therefore, my total cash emolument is going to be equal to the basic salary plus the cash allowances. Any questions so far? If you don't have any question, we are continuing. But I needed to draw your attention to this. The meeting version we are using is the free version. So whenever you are disconnected, kindly quickly join the meeting, okay? Because don't think the meeting has ended. So when it's disconnected, quickly join back the meeting for us to continue. I think it will be disconnecting like twice, then the continuous ones will be like 3 hours in that order. Now, the next stage is to look at for the non-cash benefits. The person is entitled to a fully furnished accommodation. So they said Mr. Mills Osabute was provided with a well-furnished bungalow by his employer, of which he pays 100 per month. So the fully furnished accommodation, it is 10% of the total cash emolument. So fully furnished accommodation, 10% of the total cash emolument. This should be the answer you put there, but they say the man pays something. So rent deducted. So rent deducted at source. He paid 100 per month, which is going to be 1,200. And so therefore, what is going to be the final answer is going to be equal to this minus this. And it will give you the final answer. Then he is provided with a car, fuel, and driver. In addition to the fuel paid in cash, he is entitled to company car, driver, and fuel for private and official use. And car element should be equal to 12.5 of the total cash emolument, which should not exceed 7,200. And this our calculation gives us 2,227. So we are still within the range. Assuming it is 8,000, you put the 8,000 here. Then you write here restricted to, then you put the 7,200 over here. So once it is more than 7,200, don't worry, put the figure down and just below it write restricted to, and then put the 7,200 down. There you go. So the maid servant's money is paid to the man directly, so it is here. Assuming it is paid to the maid servant directly, we would have brought it here. So you should take note. So therefore, our total non-cash benefit is going to be equal to this and this added together. We'll get 2810.119. Summing the two together gives us what you call total accessible income. So our total accessible income is going to be equal to this plus this. So the total accessible income is equal to 2632.87. 2632.87. Then you less reliefs. Less reliefs. The reliefs, this guy paid SSF and SSF by law is equal to 5.5% of the basic salary. So this is our SSF. Then he is married with 5 children. So marriage responsibility. He has children that are going to school. So child education. We are being told that this man also takes care of the aged dependents. And he also contributes to the Provident Fund. He contributes an amount of money to the Provident Fund, that is 7%, go to 0.7. Special retirement package by way of Provident Fund, of which he contributes 7% of his base salary, whilst the company tops it up with 8.5. So 7% of his basic salary goes into Provident Fund. Then this man have life assurance policy. So let's look at the other reliefs, then we come and finish with the life assurance policy. Per the new tax laws, the fact that you are married, you are given a marriage responsibility allowance. And this man will be entitled to 1,200. Initially, it used to be 200. Once your children are going to school, a recognized second cycle institution, a maximum to 3 children, you get 600 per one. So 1,800 in this our case. Aged dependent of a maximum of 2, and it is 1,000 per person. So out of the 4, we are going to take only 2. Then you compute the life assurance. So let's do the workings. Should I do it? So let's do it here. So the life assurance policy, you work out 10% of assessable income. The Nigerians will tell you income. So then you also work out 10% of sum assured. Then you pick the premium. Then you select the lowest. So your policies will be here. Just like that. So you have policy A, policy B, policy C, and policy D. 10% of total assessable income will be equal to 263.288.68. So it runs through from here to here. So this is going to be it. Then 10% of the sum assured. Sum assured for policy A is 8,000, so 10% is 800. Second one is 560. Third one is 3,200. Next one is 1,000. Then the premiums that they said they will give you they will give you, policy A is 840, policy B is 480, the next one is 3350, the next one is 1050. Now the duty here is for you to select the lowest. So when you look at the very first policy, the lowest here is 800. The second policy, the lowest here is 480. The third policy, the lowest is 3,200. Sorry, the lowest is 2063 here. Then the last policy, the lowest is 1,000. So if I'm selecting, I'll pick this one. I'll pick this one, policy 2. I'll pick this one, in policy 3. I'll pick this one in policy 4. And so the total policy sum here is equal to 4343.287. So I compare it with one of this. So the 2063 and 4343.287, which one is the lowest? So the lowest is 2063. So that becomes the answer I'll pick here as my sum assured for the life policy, or my total sum when I'm looking at this particular life policy. So from here, I can easily total my reliefs. So the total reliefs is 7976.58. And I'm to less the reliefs from the total accessible income. And what I'll get is my chargeable income. So this minus this will give me 12656.3 as my chargeable income. If you have any question, you ask me and I'll answer you. Now, the next thing you are to do is to calculate your tax liability. So we are going to calculate our tax liability So computation of tax liability. And for your information, the tax rates have changed. And I'm sure your lecturer has given them to you. And you know it. You know them. You have them. So the new ones are the ones you need to use accordingly. The law is saying that for the very first tax of 3828, they will tax you. So then let's do it amount, then rates, then tax. So this is the amount of money you have and the government of Ghana want to tax you on. So they are saying the first 3828, no tax. So if they have counted 3828 from this 12656 and still there is more money left, then the next bracket of 1,200 should attract a tax of 5%. So which is basically equal to this multiplied by this. So if after taking off the 3828 from the 126, we still have more money. And we have to subtract 1,200 from it again. If the money will reach and it will be over, then 1,200 from here should also remain a balance of 7628. Now, the next bracket is saying that if the money left will reach 1,440 and over, you see that we are at 76, so it's more. Count 1,440 and pay 10% tax. So this one is going to be equal to this multiplied by this. So if we take the 144 out, how much will be left? Is what we are looking at now. So the 7628 minus 1440 should give us 6188. Then the next bracket is saying that if the money will reach 36,000 and over, then count 36,000 and tax at 17.5%. But the money left is 6,000, it will not reach anywhere. So you just write here rest. The rest is equal to 6188.301. And tax that one at 17.5%. What it means is that this multiplied by this, I should get that. Then you know we were having some standard bonus of which we were able to take off the excess bonus of 25%. So the bonus is going to be equal to the 15%, which is the standard of the basic salary. Oh. Of the basic salary. So 15% of the base salary, give me this one. And I'm supposed to tax this one at 5%. What it means is that this multiplied by this will give me that. So my total tax liability is equal to 1341.75. You have any question? You ask. Now, if you don't have any question, we will be moving straight away to question 2. No, let's move straight away to, let me look at this. Yeah, question 4 on capital allowance. This particular question. Now, question 4. Afas Manufacturing Company Limited produces of household appliances for both the local and export markets. In some books, you can see for both the domestic and international markets, or for both the local and foreign markets. Any of the terminologies they use, they all mean the same thing. They commenced business on 1st May 2010, making accounts up to 31st December. So the dates they gave you over there are not for giving sake, but they serve a purpose. The company acquired the following chargeable assets for the use in the business, which is located at Takwa in the Western region. Now, for your information, you need to go and find out the differences between what a chargeable asset is and what a depreciable asset is so you can see the assets that have been purchased and their respective date of purchase and the cost at which they were purchased. Then you have some additional information to it. The Toyota saloon car was sold on 1st September 2012. Plants and machinery was destroyed by fire in October, and a compensation of 22,000 was received. Some of the office equipment was bought in 2010, was sold in July for 17,000, and 20,000 was paid in December 2013 for extension works on the building. And we have to calculate the capital allowance to be granted in 2010, 2011, and 2012-13 year of assessment. Very simple, but boring question. Now, so question 4, we are going to look at it. Which is on the computation allowance. Sorry. So you have your basis period here. Then you have pool 1 over here. Then you have pool 2 over here. Now they are even class 1, class 2, class 3, but I don't know why your lecturer is still using pool. So I'll also use the pool for you because of one thing. If I decided to digress and use class right now, I'll see the backlash the students will be giving me. The lecturer said this, the lecturer said that. So I'll do.
So in my place, you also used class. You use class.
He used class, not the pool.
You use both class and pools.
Oh, what are you trying to say?
Oh yes, he used both class and pools.
So
He
he
said some
used
are
the,
in the class and some are in the pools.
so where did he use class? Where did he use pool? He used the class for 5, right?
Yes, class 5A and class 5B.
Class 5B. So he's still doing the
Yes.
old thing. It's still the old thing he's doing. Now with the GRA, we don't have anything called pool. We have class 1, class 2, class 3, class 4, class 5 in that order. And
Oh, okay.
but I'm sure when you are upgrading or when you are moving forward, you get to see some of these changes. But don't worry. So class 5A, then let me put here class 5B, and I put here total. So as when we are going and others pop up, I'll put them there. Now, let's move on. Now, the year in which the person starts business is very important. So for the 2010 year of assessment, he didn't work for the whole 2010 because they said he started business on 1st May. So you have May, May to December. You have May to December. May has 31 days. June has 30 days. July has 31 days. August has 31 days. September has 30 days. October 31 days. November 30 days. December 31 days. So if I want to sum up all these days, the total here gives me 245. It means that these people work for 245 days in the 2010 year of assessment. So when I come here, I'll put here 245 days. They have not worked for the full 365 days in a year. So this is how I got my 245 days here. I look at the month they start working, how many days has that month, and then based on that, I used to do my calculation and my projection. Now, you do what you call additions. The addition simply means assets you bought. So when you are buying assets, it is addition. When you are selling assets, it is disposal. So buildings in 2010. So for 2010, building. So class 5A, the building cost 200,000. Then computer software, that is pool 1, it costs 400,000. Then you have office equipment, 15,000, which is pool 4. Put it there. Then you have another one for 2010, saloon car. Now, when we are talking of saloon cars or cars that are being used for non-commercial purposes, there is a cap to it, or there is a limit to which you can grant capital allowance on. All saloon cars before 2013 have a maximum cost of 25,000 Ghana cedis. So before 2013, if there is a saloon car or a private car which capital allowance needed to be granted on and the cost is 80,000, the GRA will allow you a capital allowance up to a maximum of 25,000. From 2013 onwards, it has been increased to 75,000. So look, this saloon car you are buying now is 45,000. So we'll be restricting it to 25,000. We'll be restricting it to 25,000. Here like this. 25,000. Then when we sell in 2010, did we sell anything? No. When we sell, we call it disposal. So anytime you are selling the assets, anytime the asset is destroyed by fire, or the asset has been stolen, or the asset has been involved in an accident, you treat it like the way we do disposal of assets, or they are all considered disposal. Under taxation, disposal means when the ownership in the assets is lost, or the ownership in the assets has been transferred to another person. The asset is considered disposed, not necessarily selling it and getting the money from it. No. But there was no disposal. So capital allowance. And pool 1 rate is 40%. Pool 2 is 30%. Pool 3 is for heavy duty equipment and minerals and mining companies. Pool 4 is for 20%. Class 5 is 10%. And from pool 1 to pool 4, we grant the capital allowance on the reducing balance method. But for the class 5, the capital allowance is granted using a straight line method. So to get this one, I say is equal to this multiplied by that, the 40%, I get this. But take note, you work for 245 days in a year. So you have worked for, let me do it here so that I can quickly do it. 245 days out of the 365 days. So everything will be multiplied by 245 over 365. So this is going to be your capital allowance for the year 2010. So I do the same thing up to pool 4. So these are going to be my capital allowances. This one is also going to be like that. So capital allowance for the year 2010 has been duly calculated. Then I look out for what you call the written down value carry down. And it is equal to this minus this. So the additions or the cost minus that. Then the total here is equal to the summation of the capital allowances I have here. So for the 2010 year of assessment, this is my total capital allowance. This is what the question wants you to get for the 2010 year of assessment. Then I go down to 2011 year of assessment, which in this one, we are going to look for a full year. For a full year. Because this one is going to be from January to December. So I write here written down value brought down. As I told you, the network will be disconnecting in the next 2 minutes. When it disconnects, quickly connects, then we continue. Written down values brought down is going to be this figures you had here. So you are just repeating them here again. Then in 2011, you look out for additions. Which assets did we buy in 2011? In 2011, we bought office furniture for 8,000, which will go to pool 4. So you put it there. We bought plant and machinery of 50,000. So 50,000 pool 2. We also bought, okay, so for the 2011, we bought only 2. So the 50 and then the 8,000. So nothing here. Nothing here. So to total it, so it's going to be equal to this plus this. So then you come to disposals. In 2011, did we sell something? No. If we have not sold anything in 2011, then we go on and say capital allowance. So it's going to be equal to 40% multiplied by this. Then it continues like that. 30 multiplied by this. But bear in mind, I say when you get to class 5, it is on straight line. So it's going to be equal to the 10% still multiplied by the cost, straight line. And you get this one. So to get your written down value carried down, what do? It's equal to this minus the capital allowance. You get that. Then total. So this is your written down value carried down for the 2011 year of assessment. Then total your capital allowance for the year. Written down value brought down is going to be equal to written down values you have here. Then 2012, what were the additions that we had? 2012, we didn't buy anything, but what we did was rather a disposal. So the Toyota Saloon car was sold on 1st September 2012 for 24,000. So the total saloon car disposal 24,000. Sorry, 24,000 will go from here. Plant and machinery was destroyed by fire in 2012. And on 15 December, 22,000 compensation was received from the insurance company. So plant and machinery was also destroyed. So in 2012, we have sold and made 24,000. The insurance company also gave us 22,000. So the total disposal here is going to be the 24,000 plus the 22,000. So total disposal here is going to be 46,000. Then, some office equipment was bought in 2010, were also sold in July 2012 for 17,000. So look at it. Office equipment as of the beginning of 2012, the value is 16,789. And we are selling the thing for 17,000. When it happens like this, it means there's a profit. You have made some profit on disposal. And this profit is supposed to be added to your business income or your other business income. So what it means is that if you have your 17,000 here minus your 16,789 minus your 16,789, it means from this sale of office equipment, you have made a profit of 210, and this 210 will be added to your business income or your other business income if you are supposed to calculate the chargeable income. But I don't think the question here is asking you to do that. So what you do is that you repeat this same thing over here as a disposal so that it clears off the book, because we are selling that particular asset from the books. So after the disposals, what is our balance? Is going to be equal to this minus that. And so therefore, oh, sorry, I shouldn't have closed it. Then I grant my capital allowance, which is going to be equal to this multiplied by the 40%. I get this up to here. Bear in mind, it's equal to the 10% multiplied by the cost, original cost, so 20,000 over here. So my written down value carried down so my written down value carried down is going to be equal to this minus that. And my total capital allowance for that year is going to be the summation of this up to that. So this is my capital allowance for this particular year of assessment. So the questions I should find for 2010, 2011, and 2012, which I did. Now I'm going to do that of the 2013 year of assessment, and that one too is a full year calculation. So written down value, wrote down, is going to be equal to this and the rest. Then I look out for additions. In 2013, which assets were added on? You need to look for those ones. 2013 Toyota Land Cruiser, have you seen it? 80,000. Toyota Bus, 70,000. At the beginning of the lecture, I told you something. That whenever we are buying a vehicle, it's either we are buying it for the private use or we are buying it, let me put it in this way, it's either we are buying it for commercial purpose or for a non-commercial purpose. Okay, so let's move on.